Good morning, Checkmate crew. It is opening bell of the New York Stock Exchange here at 9:30 a.m. on this Tuesday, October 4th, 2022. Yours truly, Mickey Blindside here with your market memo. Okay, last week we had the market make a newer low. All right, everybody piling on into puts at the low point. I said probably not a good idea, but everybody's free to do what they want to do. I know on Twitter, a lot of people were calling for the end of days, all right? And remember on the special session, we had a special session that day on Friday, and I said, hey, there's a very good chance that the Fed pivots, okay? Didn't I say that? And I did, all right? So lots of people went way short here. A lot of people, even people that I thought were a little bit more reasonable, they kept piling on to puts here. And lo and behold, on Monday, that just reversed. We had an outside day up, and we're seeing continuation of that rally. That is a lot of pain. That's 150 points. So for those of you who leveraged short on Friday end of day, you are not looking very pretty right now, okay? This is why I always wait for the edge of price structure, or I wait for my position building, and that's why I look a little bit more long-term. I know I look a little bit more long-term than most of you would like. Most of you like to look at things on an intraday or a day trading scale, but me, I like to look at weekly, monthly moves. And again, my plan hasn't changed. 41.25. This is where I short, as long as our internal data remains weak. Let's look at some of our internal data because I think it is important. All right, markets are under the hood, at least things are changing. Okay, we're changing. Look at the 2-year, and the 5-year. We were looking at ZF futures. Remember, those are the bond futures prices on the 5-year Treasury. So when that goes up, the actual 5-year yield is coming down, okay? And if you look at our yield, it is coming down. It is stabilizing. So if we look at ZF, what did I tell you guys? Down is dash for cash, up is cash is trash. Now, I'm not saying cash is trash yet. No, the yields are still too high for cash to be trash, but it is lessening the incentive, okay, to be holding that cash, all right? And so, if this goes further up and the 5-year goes further down, I do think that the dollar is probably going to be coming down some more. Okay, and if the dollar comes down more, let's say the dollar comes down into this hundreds range, that would be definite tailwinds for U.S. indices. All right, it just would. We could probably see that 41.25 zone actually play out. And again, I'm going to be buying those 1 to 4 month put spreads. It just depends on the implied volatility at the time. It also depends on the internal data. So those are the rates. So if you look at also our New York high-low line, I put this out yesterday, but we now have 2 advances over declines in a row. Generally, when we see 4 in a row, that means we can see a sustained rally. We can see a rally that lasts a couple to a few weeks, 2 to 4 weeks. All right. Last time we had that, remember, in July, we had that sustained rally in July. We had 4 days in a row. It was right after that July 4th weekend. We had 4 days in a row, and then we had the sustained rally in the market. Remember that? Okay. So here, this was not 4 days in a row, so we could not sustain a rally. This was just 2 days in a row, and then it went down, okay? But once we get 4 days in a row, that can last 2 to 4 weeks. So let's see what happens, okay? So July, it was here. I remember it was like July, after July 4th, that weekend, when we came back, it was, 1, 2, 3, 4 days in a row of green. Yes, we pulled back a little bit, but then we had a sustained rally afterwards, okay? I can see that happening. All right. Again, I'm not trying to predict the future. I am going to wait and see. That doesn't mean we can't get pullbacks. We can still get pullbacks. All right. But after that pullback, if we do see a pullback after 4 green days in a row on our junk bonds advanced decline line, I will try to buy a dip. All right. I don't know yet how I'm going to buy the dip. I might be buying UVXY puts for that. Okay. UVXY puts just getting disintegrated. Right now, the contango is flat right now. It's the difference between the forward month and the front month is like only pennies right now, I believe. Let's see, 28.65, 28.68. Yeah, so it's only pennies. So we'll see. At the end of the day, if the contango steepens, that would also be a pretty bullish sign, at least in the short term. That's a very short-term bullish signal for equities. So we'll see. Okay. And again, the main picture. Okay, I keep telling you guys the big picture. The big picture is still we're in a downtrend. All right. Liquidity data is improving. All right. So unless we see the junk bonds ADL make a higher high, which I mean I don't see that happening. So unless that happens, or if our New York high-low line starts curling up above all these moving averages, unless that happens, I am going to short at this 41.25 zone if we get there. Okay? So that's my plan. Speaking of which, the plan, HUT. We got HUT at 167 or so. That is turning out to be a very good buy. All right. If we get to 41.25 zone, I presume that HUT could probably go up to like close to $3. Maybe like 260s, 280 or so if it goes to 41.25. If it does, I'm going to be selling covered calls on this. All right. We also bought on the downturn. We also bought UUUU. All right. It started way higher today. I remember it started in the 680s. It's coming back down. Thank goodness. I don't want to get this called away. You guys know my positions. I show you guys everything from the beginning. I show you guys every entry live. I don't wait to tell you guys about my positions. I tell you guys at that moment when I take the trade. So you guys know what my trades are. You guys know my positions and everything. So I still have the same positions. I still have the short 7 calls and I'm long the 5 puts. I mean, it may get assigned. We'll see. I mean, if it does get assigned right now, my cost basis is I think around 607. After the averaging I done, I did averaging at 697 and then at 560 something. But then I sold covered calls and I bought protective puts and I cashed out of the first round of protective puts, which gave me some profits. It brought my cost basis down to like I think 604 or so. But then this collar was done at a 3-cent debit, so now I'm at like 607. So I'll gladly take the profit at 7. That's like a 16% profit in like a month and a half or so. But it would be nice if it just closes below 7 by November. I don't know. Maybe the next Fed meeting. Maybe they spook the market a little bit. Who knows? I don't know. But I'm not chasing it. Somebody asked me, would I buy back the calls if I risk challenging that 7? No, I am not going to be buying inflated calls. I'm not going to do that. So if I get assigned out, I get assigned out. It is what it is. All right. Once we start adding money to cover our inflated options prices, that's when our probability of profit goes way down. Okay, and I'm not. I use data and math. I'm not going to lower my probability of profit just to keep a position longer. It is what it is. It's life. It's part of trading. Okay, so that's my updated plan. Let's look at some of the plans that we did not take that I guess we should have. Oil, I mean, that 75, 77 zone, that was a perfect zone to load up. I chose not to do it. I chose to go a little bit more with HUT and UUUU. So it is what it is. But that would have been nice. And all those call spreads I was looking at, I think right now you would have doubled by now. So that's pretty good. If you guys took the trade, hey, there's nothing wrong with taking some profits here. But for me, my big trade in oil is going to come at, here. And we're going to short oil right here. Okay? The 120, 125 zone. All right? Most likely we're going to be in the December contract by then. And that in the December contract, that comes out to be about a 105 to 110 zone. All right? So that's where I see a good short opportunity, at least the edge of our price structure. Okay. Other plans, Ford. Whoa, wow, look at that. Ford actually missed my buy entry by 3 cents. I had a trigger for $11.10, like I told you guys, and it went all the way down to 11.13. That's it. 3 cents. And 3 cents we would have gotten in with some leaps, but oh well. That's life. That's trading, I guess. That's a shame. That's a real shame. Let's see. Tesla. I haven't talked about Tesla in a while. I am looking to short when it gets to this level right here. Remember this red line? Remember, for those of you who've been with me for a while, following me on Twitter or from the old Discord, remember here? We made a lot of money here, remember? At the time, ARK funds had a huge position in Tesla. I don't think that ARKK, I don't think they have Tesla anymore. But here, remember, we shorted ARK when Tesla got here, and we made a lot of money doing that, remember? I made some money here too. This is a good line. I think this line holds. If we get to here and our internal liquidity data, again, the junk bonds ADL, the New York high low, all that, if that still remains weak, yes, I'm going to buy some puts right here. Got no problems doing that. All right. Japanese yen. Let's go to the Japanese yen chart. I like to use TradingView for Japanese yen because I can flip back and forth between USD JPY and JPY USD. So for those of you trading Forex, you guys are going to be looking at this chart right here as the USD JPY chart, well, most likely. This is actually approaching our buy level for Japanese yen futures. It's getting close. It's flirting with that again. Remember how we missed it here? This move, by the way, it's like 200. It's like holding 200 points on a leveraged S&P 500 contract. 200 point. That's like the type of win this was of one day. I mean, that's unheard of in that's unheard of in currencies. A major currency too, like the Japanese yen, the third largest currency in the world. You don't see that. Those are not common. But, oops, I forgot. TradingView doesn't allow for slashes. So we're actually approaching that. 69640, if you look at the front month contract, the area that I really want to buy is 6901. If we can get there. I might raise it a little bit. I'm not sure. I might raise it to this low right here, 6930. I do have a standing order for 6901 that I never canceled from here, but I might raise it up to 6930. Actually, it would have 6930. I think would have triggered. No, it would not have triggered. It would not have triggered even here. Literally one tick away from 6930. One tick. Oof. So I don't know. Maybe I do that. Maybe I do this low right here, the one tick above 6930. Maybe I put up the order. You know what I'm gonna do? I'm gonna set an alert for 6935. Yeah, I think that's what I'm gonna do. I'm gonna set an alert for 6935, and then as it approaches 6930, if it gets close enough, I might just manually get long on there, set my stops and my take profit, and then just walk away from my terminal. I might do that. Okay, so I still have a plan on entering this. I do think the dollar coming down, the 5-year futures going up, and from the special session on Friday, which I invite you guys to go back, go look at our playlist, and it's on our special sessions playlist and the market memo playlist. Go back and look at that special session from September 30th, which was last Friday. I do think that we see a Fed pivot within the next 90 days. And that is definitely going to do some damage on this chart, on this USD JPY chart. So the Japanese yen is going to go up. When the USD JPY chart is going down, it means the Japanese yen is going up. And I do think that there's going to be some intervention because I don't think the Fed wants there to be some widespread solvency issues. Unless, now here's the caveat to that, to Friday's thesis. If the dollar like just comes down on its own, that would be doing the Fed's job for it. So the Fed would not need to intervene. Okay, so if the U.S. dollar comes down to, like, let's say 107 or lower. Actually, let me put some Bollinger Bands on this. Let's take a look and see. Yeah, I think if it goes down to 107 or lower, the Fed may not pivot. Okay, I didn't think the dollar was going to break down like this quickly. Okay, I think if the dollar breaks down below 107, the Fed may not even pivot because now it gives them breathing room. I think they would pivot if it starts challenging these highs again at 114, 115 on the dollar index. So let's watch and see. Okay, I think that on the Friday's thesis was based on the dollar just staying at these these kind of quote unquote crisis levels. Okay, but if the market just brings down the dollar and does the Fed's job for it, there would be no need to do that. They can keep their credibility and still tighten. All right, now let's look at the CME group odds for this. Okay, so we're already seeing, let's update. Where are we at right now? We're at 325. Oh, look at that. The market is pricing in now, again, a 75 basis point rate hike. I remember last week we were at 50-50, between 50 basis points and 75. So now we're going toward back to 75. I wonder if it's because of the dollar. Coming down. So now that the dollar's coming down, maybe the bond market is thinking, gee, well, now the Fed doesn't need to pivot because already the currency market is loosening conditions. That could be. Okay, let's look at December here. So it looks like we're still looking at the possibility of 75 basis point rate hike for November. And December, we're looking at still the chance of a 50 basis point rate hike. And in March, either we stay the same or we do a 25 basis point rate hike. In May, we keep it to 450, and yeah, so, and then sustain, and possible cut in December. Okay, so that's still kind of the projections for the Federal Reserve. But that's crazy how this shifts back and forth, okay? So, and I think it's basically on the dollar. If the dollar keeps coming down like this, I think the bond market is telling us that maybe the Fed doesn't have to be so dovish if the dollar just keeps coming down, all right? So this is kind of changing day by day here. Very interesting. So, again, I'm not going to do any big trades until then. Again, big levels, and that's why I just can't I can't trade in no man's land with on the S&P 500 where it is right now. This is no man's land right now. Doing any trades here, even shorting here, it's kind of no man's land, because if the dollar keeps coming down, we could definitely see the markets rallying even higher, possibly over to 3,900 and higher. Okay, there's still a lot of in-the-money puts. There's in-the-money puts all the way up to 4,000 or so. It only starts getting bearish in the closest monthly options expiration over 4,100. Okay, that's when options positioning starts looking bearish above 4,100. Okay, we still got a lot of in-the-money puts until 4,000 or so. So just keep that in mind, guys, as you trade. I know some of you are day traders. For those of you day trading with puts, keep an eye on that. manage your risk, keep your losses small if you do see losses. All right. So that's what I have for our indices. I want to now take a look at crypto. Crypto actually has been surprisingly easy to trade. So, that's a warning sign right there. Whenever I say easy, it starts getting really difficult. So maybe I shouldn't say that. But surprisingly, our levels have worked really well in Ethereum. We got our buy, remember, at 1241.46, and we really haven't been challenged on that. I mean, it did retrace, but it was still well above, 10 points or 20 points above. And now we're what? Almost 10% ahead from that. And it looks like this is the floor right here, at least on a short-term basis. And again, my plan is still the same. If our internal liquidity data, junk bonds ADL, New York high low, all the things I talk about almost every day, if that doesn't improve drastically and show me a more MOAB signal, if it doesn't show me that, I'm gonna take profits at 1650 right here. Okay. I'm still going to do that. And if we fall for whatever reason, I'm going to be buying when the ETH gold ratio, when our ETH to gold ratio gets to that red dotted line. Still a major buy zone for me. Okay. If we look at the options market in ETH right now, a lot of that short gamma shifted up 50 points. So now instead of, remember how last week we had all that short gamma at 1300? Now it's at 1350. All right, it's at 1350. Remember that. Now, where are we at right now in ETH? We're at 1350. And guess what? I think we've been chopping around here for a bit. Yeah, we've been chopping around this 1350 area for a bit. Gamma pin. Okay, this is a gamma pin zone right now. So whenever we have a lot of that short gamma, we have a good possibility of seeing that gamma pin happening. Okay, and I think a lot of that expiration is actually on October 7th. October 7th. When is October 7th? That's the end of this week. All right. So it looks like we could be in for a gamma pin for the rest of the week at 1350 on ETH. That's one thing I noticed over the weekend and into today is like this 1350 zone is, we've been chopping around there for a bit now. All right. We do go, but it always tends to come back. So I wouldn't be surprised. And ETH, it's not as big as a market as U.S. equity. So I could see like an overshoot and then it comes back down. The range, you got to understand volatility is really high in crypto. 5, 6, 7% moves in a day is not uncommon. So, we could see it overshoot, but then it may trend back down if that gamma pin still remains. And with the options market, the open interest has gone down significantly. Remember how we were close to like 7 billion? I don't think we're there now. I think we're closer to 5.4, if I remember correctly. Yeah, 5.4. So remember how we were like 6.5, 6.6? So unless we start seeing more order flow coming in and more people holding their contracts, I definitely is definitely within the realm of possibilities that we keep that gamma pin until October 7th expiration. All right, let's take a look at the block trades for ETH. Deribit has been kind of slow. I don't know why. This portion of the site where it's got the block trades has been like this all day today. Well, we'll come back to that. We'll see what happens. And then let's take a look at options positioning. I want to take a look at the 7th and just see. Oh, Deribit, what's going on? Okay, it is what it is. So I guess it's not going to cooperate today. Deribit's site kind of does that. I don't know if that's the case for their paid members or people that have accounts with them, but here in the U.S., they don't let individuals open Deribit accounts. it gets snagged by KYC. So, okay, I'll check on that later today, and I will report to you guys what I see once this site works again. But we'll see. My plans still haven't changed for ETH. I think the options positioning is telling us. I think, if I remember correctly, I did see a lot of calls on 1700 and up, if I recall correctly. That's where a lot of the OI was for the December and March contracts. And you know, I don't want to be subject to somebody else's profit taking and a dump in that market. So I will take profits, and I'll try to re-enter at lower levels as well. Oh, speaking of monthly charts, you know what? Last month I did not show you guys this, and I think it's worth ending the note on this on this topic right here. Rates, okay? Inflation, rates. That's what everybody's talking about right now is interest rates, the Fed, inflation, what's going to happen. One thing I want to point out to you guys, remember this chart? I don't know if you guys remember this chart, but this is a monthly chart that I wanted to show you guys. I forgot last time. Remember how I said that the copper divided by gold ratio has been tracking the 10-year since 2007 pretty accurately. And sometimes there are divergences, all right? So this is copper divided by gold times 1,000. And whenever that ratio diverges, it tends to be they meet up again, all right? When it diverges, they tend to meet up again. And generally, it's this ratio that makes the move first, and then the 10-year usually follows, okay? It's usually the 10-year changing to follow the ratio, all right? As you can see here, the ratio moved up first, our copper-gold ratio moved up first, and then the 10-year followed. Well, here's the thing. Look at this. The ratio is pointing down, which means the yield, if history repeats itself, and it doesn't have to, maybe this time it is different, we could see this rate coming down, okay? The 10-year coming down. And that would actually go with our thesis. Remember on Friday, on the special session, I said that if the Fed pivots, most likely what they're going to do is some type of yield curve control where they buy longer maturity bonds and set a floor or set a ceiling on long-term yields, okay? This actually matches our thesis. So if this actually comes down and our yield, or our 10-year yield comes down, that is going to boost multiples within the stock market, and QQQ is going to love it. The NASDAQ is going to love that, all right? The NASDAQ will be sugar high, okay, if that happens. I'll believe it when I see it, but maybe a potential trade is a TLT long, all right? Maybe, okay? I really want to see... I want to see that move happen first. Okay, I really want to see that move happen first rather than me doing this. So, I mean, if we get a retrace and some sort of exhaustion signal on TNX, like let's say TNX goes up a little bit, like here, and goes up a little bit, and then it has an exhaustion signal and starts coming down, then that's when I'm going to go long on TLT. So until I see a retrace and exhaustion signal on the TNX, on the 10-year Treasury, I am not going to do this, okay? So I need to see that signal first, because the price of being wrong is going to be quite expensive. I don't want to, again, my number one priority as a trader, which should be all of our priorities, is risk management, okay, and capital preservation. But if we get there, I think it's worth a trade. I'm going to be looking at like 3 to 6 months. Let's just look at January's. I mean, right now, our skew's all right. I would be looking at something like this. Buy verticals. That's the 10 what? The 105. Okay, 105. 105 is good. 105, 115. That's at 3. Okay. That would give me what, 2-to-1 reward to risk, 2-to-1 reward to risk. What delta is that? That's a delta 23. Okay, that's decent. I mean, that's decent. 120 would be here. 120. So that would be 4/20. So that's 3-to-1. Okay, so that now we're getting to 3-to-1. But what's the chance of TLT going to 120 though? TLT going to 120. Let's take a look at our chart here. TLT going to 120. That would just be, okay, that would just be going to the upper 2 standard deviation weekly Bollinger Band on the weekly chart. Okay. For 3-4 months? Okay. That's not bad. That's not bad. That is not bad at all. I like that trade. I like this. No, it's not. No, it's not 3-to-1. I thought it was $20 difference. No, it's 15. It's 15. So that's 4/11. Okay, so it's a little bit better than 2-to-1. It's still a little bit better than 2-to-1. Almost 3-to-1. Almost, but not quite. So we'll see. But that one actually looks pretty good. The 105, 120 for January. That one I like. We'll see what happens though. We'll see what happens though. Okay, because if this goes down, if TNX goes up and TLT goes down, then the premium that's left in that 120 may not be enough to offset. But I mean, then again, you know, this will be lower too. But then you're a little bit further out the money. I like my long strike to be like right at 50. Sometimes I'll venture into the 40s, but I like, you know, I like the long strike to be as close to 50 as possible though. That's just me. That's just me though. But we'll see. We'll see as we get closer and closer to that. If we get that signal from TNX, we'll look at this trade even more. But now my eyes are on TLT and TNX. I'm looking at these as potential trades and adding that to our plan. But again, I need to see that signal. I'm not going to just go in just because the levels are nice or whatever. You know, that's not my thing. You know, I need to see some sort of signal in order for me to do it. And so again, it would be nice if we get a get off my screen here. It would be nice if I see a retrace of this. And under its previous high, it has an exhaustion signal. That would be a great opportunity to leg into TLT, those call spreads. So I'm adding that. Anything else you guys want to look at today? Anything else? Going once? Going twice? Oh.
Put some links in voice chat.
Oh, who is that? Okay, you put some links in the voice chat. Let me take a look. Where we can look at crypto data that's not Deribit. I'm gonna have to do my homework on this. I don't know what their how their layout is. Let me see this. Analytics. Is this gonna show me the block trades? No. What I wanted to see was block trades. You don't happen to have this site doesn't happen to have some block trades, does it?
I'll have to look into it, but if you look at the other links, there's a.
Okay, well, MSC, you just cut out there for a second, but okay. So,
all right, I'll have to look into it, but there's other data links as well.
Okay, gotcha. So yeah, I'll look into it as well. This is still not working. Shame on you, Deribit. Shame on you. Okay, so yeah, again, once I see that working, I'll post it on our Discord. So if you're joining us from Twitch, YouTube, or Facebook, hey, check out the video description below. We have links to all of our sites and our Discord channel where we talk trade around the clock. And when things like this don't work on the live call, I always post a follow-up on our Discord. It's got my live alerts and exclusive market commentary, and it's all free. There's no paywall. So, hey, you know, why not? Or what do you have to lose? Go ahead and click that Discord invite link and come join us. We're all about education and building a thriving community of traders here where we can bounce ideas off of each other. It's of the people, by the people, for the people. So I'll be back again tomorrow and Thursday, same time, New York Stock Exchange open, 9:30 a.m. Eastern time. Hope you guys have a wonderful day, and I'll see you guys on Discord. Have a great day.